Step 1. Perform index and sector analysis and follow the trend. Index is like an auction. An individual stock is like a boat. As an investor, I will analyze index first. If the index is at all-time high, I would either sell part of stocks or do nothing. I will not buy the stocks as the risk-rewards ratio is not attractive. In the bull market, each dip is an opportunity. For my analysis, I prefer to use MA50 and MA100 and MA200 in my analysis. You could use both daily and weekly chart based on your preference. To me, when I have limited cash, I prefer to use weekly chart to have a better entry. If I have enough cash or do monthly contribution, then I will use daily chart. It is fine to both ways as long as we keep us disciplined. Let us use Nasdaq Composite Index as an example. This is the daily chart for the Nasdaq. There are 5 moving average. SMA 20, dotted red line, SMA 40, dotted blue line, MA 50, blue line, MA 100, orange line, MA 150, green line, and MA 200, red line. SMA stands for exponential moving average, which has a better response to shorter time frame, and MA stands for moving average. Although moving average is a lagging indicator, but it still can be used as a useful reference. For example, could you tell us Nasdaq tends to rebound on which moving indicator? For a swing trader, SMA 20 is a good entry point, but as an investor, I prefer to wait for moving average 100 because one dip to moving average 100 could wipe out our profits for each dip at SMA 20, and we may not have enough bullets to buy at MA 100. Thus, whenever the index hits MA 100, I will either buy the ETF that tracks the index itself, such as QQQ, or I will then look for the individual stock that I will be sharing in the step 2. Identify a buying point does not equal to size positioning. I will share about the size positioning in step 3. Similarly, if we look on the 3 years weekly chart, it is pretty clear that SMA 20 is a very strong support. If we wait for MA 150 or MA 200, we are losing a lot of opportunity. For the weekly chart, the SMA 20 is currently equivalent to the MA 100 of the daily chart. But overall, MA 50 for the weekly chart is a much stronger support for the Nasdaq Composite. I shall talk about the protection and how to sell the stocks to protect our profit in the future videos. We can then also analyze both Dow Jones 30 and S&P 500 if needed. However, please note that not all sectors perform similarly. Thus, I will then look for the sector performance in FinVid. Google FinVid sector performance, then it will lead you to the link. For a shorter term analysis, I will refer to 1 week and 1 month relative performance. For the short term period, consumer, cyclical, and technology are the weakest. Indeed, recently, Nasdaq had a minor correction of around 4 to 5%. I added quite a number of Microsoft stocks that I will share it in the next step. For the short-term sector analysis, I will focus on daily chart. For the specific ETF, we can refer to XLK for the technology sector. We could see that last week, SLK had a correction. For the consumer cyclical XLY, the price is still relatively high. I would prefer to wait for it to touch MA50. From the sector analysis, I will dig into the stocks in technology to look for the potential buy point. For the momentum trader, they will look for the sectors with the best performance instead to buy high and sell higher. Of course, in this case, a stop loss would be important to protect the potential correction. For the long-term sector analysis, I will then look at 3 months and half-year data. From here, most of the sectors are already recovered as they are pretty tally well with the short-term analysis. Similarly, technology and consumer cyclical are still the weaker sectors for 3-month performance. For the longer-term sector analysis, I will look at their weekly chart. By looking on their weekly chart, only SLK is nearly deep to its SMA 20 but XLY is still relatively far from all the moving averages. I hope you learned something new here, as we really spend a lot of time to deliver the best to you. Plus, we are going to prepare more videos to help you to kickstart your investing journey. I hope you could click the like button to motivate us more. If you have not subscribed to our channel, please click on the subscribe button and turn on the notification bell to get our latest updates. If you think that this video could help others, please feel free to share it too. Please join our Telegram group in the description if you would like to engage with a group of like-minded investors too. Step 2. Combine valuation with support, resistance, or moving average to identify a buying point. Next, as most of the companies have released their earnings, let us check the current intrinsic values of my favorite stocks. Here is the summary table for my updated intrinsic value and current price of my favorite stocks as on 7 May 2021. Please note that I am using discounted cash flow approach to estimate the intrinsic value. My method is not applicable to the company that is still not profitable, as there is no net earnings for me to include in my formula. Basically, these stocks pass my 5-step criteria as a strong fundamental company. In addition, most of them also bring nice average return for the last 10 years. Please refer to my previous video at the top right corner if you would like to know more about this. In summary, the stock highlighted in green is considered undervalued based on their money-making ability. Please note that Disney, Trax, Costco, and PayPal, I'm still waiting their updated data. The values here are expected to be lower as they are very good stocks in beating their estimates. It is important to note that a stock at undervalue does not mean that we can buy it directly. We still need to perform buying or entry point analysis